Pensions and the Autumn Budget 2024. Rachel Reeves announced a fairly major but just a simple change to pensions, which is that they will now be subject to inheritance tax when you die. This is quite a big change, and it's a change in the rules from what everybody's been advising over the last number of years. So I want to look at why that she's made this change, what the background is, and then from that, so that you can see whether it's going to change back, whether pensions are still worth it, and then sort of have a look at what the strategies are. I do regular updates on tax and accounting issues, so if you'd like to be kept up to date, then please subscribe to the channel, and I will be doing updates on a number of things that Reeves brought about in her budget, so please subscribe for that reason as well. And if you press the like button, it helps me and the channel, so if you're able to do that, thank you for that. So the Autumn Budget 2024, one of the big changes was the change to pensions, whereby they are now going to be included for inheritance tax. And inheritance tax is at 40% if you have assets in total that go over the limits. That's quite a big change, because a lot of advisors have been saying, well, don't spend your money in your pension, that's really good for inheritance tax planning. So why are pensions good for inheritance tax planning? So I'm just going to give you a little, very short history of pensions. So the purpose of pensions is that you, instead of, because you're not taking the income now, you put it into a pension scheme, and then you're going to take the income when you retire. So you can have a tax deduction now when you're earning and maybe paying a high rate of tax, and then you take the income later, and you're probably at a lower rate of tax then. But the government saw this as fair and something they wanted to do, because they wanted to encourage people to have money in retirement so they didn't rely on the state. And as a little extra, they gave you a 25% tax-free lump sum, so you got 25% of the money that is never taxed. So why is it used for inheritance tax? So we have to go back to pension freedom. So George Osborne, about 10 years or so ago, brought about pension freedom. Before that, you had to buy an annuity with your pension when you got older. So I think it was 75 the limit. Then you had to put all your money into an annuity. An annuity means you give your money to an insurance company, and in return they give an income for life, and at the end of the life your income stops, so there's nothing left for your heirs. There's no inheritance tax issue because the money no longer exists. So pension freedom means that there might now be money left in your pension because you no longer have to buy an annuity. That gave rise to what happens to this money, and therefore it could be used for people, for your heirs, and therefore it could be used for inheritance tax planning. And after a few years after pension freedom, people thought, oh, this is really good for inheritance tax planning. So pensions were being marketed very widely and being advised that don't spend your money in your pensions because that's really good for inheritance tax. And that was, to be fair to Rachel Reeves, that was never the intention of all the tax relief related to pensions. So what she's done is now said, oh, no. Now this is going to be subject to inheritance tax. Now it is possible that a future government will change that, and I just don't know. And of course, every 5 years we can change our government, so we will see. But is a strategy of just making sure that you die under a Conservative government, is that a sensible one? And will this be changed? So let's just look at whether pensions are still worthwhile. So what is the purpose from a tax point of view of putting money into a pension? Well, if you're a high rate taxpayer, you can put money into pensions and then take it out, hopefully at basic rate, when you retire, and you get a tax-free lump sum. So your 25% tax-free lump sum, that is never taxed. That's one benefit. At the moment, if you're a high rate taxpayer in a company, you're probably paying something like 50% tax. And if you're a basic rate taxpayer in retirement, you're paying 20%. Tax-free lump sum works out as that's 15%. So you're taking 50% tax into 15% tax. That's definitely worthwhile. If you're a basic rate taxpayer in a company, you're probably paying something like 30% tax. So you're turning 30% tax into 15% tax. That's okay, that's worthwhile. If in retirement you become a higher rate taxpayer, then you're going to be, you maybe don't get your tax-free lump sum, so you may be paying 40% tax. So if you're commuting 50% tax into maybe 40% tax, not sure if that's worthwhile, it's up to you. There's a lot of restrictions on pensions, so whether you think that smaller tax saving is worthwhile, that's a choice. So are pensions worthwhile? Well, yeah, they definitely have a place in your planning and your tax planning. The other change that Rachel Reeves has not made, but has continued, is relating to the tax-free lump sum. The tax-free lump sum has sort of been abolished by stealth. So what they've done is they've capped it at just over £1 million. Well, very few people have £1 million in their pension, so why do we care? So for people like me who are nearer to retirement age, it's not too much of a problem. But if you're, say, 30 and you're expecting to have another 30 years before you take your pension, then 30 years of inflation, if that's not now being increased, that £1 million is not being increased by inflation, I think that tax-free lump sum is becoming very much less worthwhile. For 30-year-olds, a huge number of them will be over £1 million. So for a 30-year-old, will you get your full tax-free lump sum? Probably on all of your money? Probably not. So your tax-free lump sum, some people will get in full and some people won't, and what that has the effect of doing is turning it so you're paying 20% tax-free lump sum, 15% tax. Well, a lot of people will actually be paying 20% because they won't get tax-free lump sum. So that's just needs to be thought about in the mix. The other change I want to talk about is the last government got rid of the lifetime allowance on your pension. So you can have basically as much as you like in your pension, although you are limited to how much you can put in each year. They did that basically because doctors were blowing through all the limits, and they were retiring because they were getting huge tax bills resulting from their pension schemes. So the current government has not reintroduced the lifetime allowance. However, it's sort of a self-policing allowance now, because what they've done is, if you sort of have so much money in your pension scheme that you've got a choice between being a high rate taxpayer because you've got to take so much out each year in order to have zero when you die. So you either become a high rate taxpayer as a pensioner, and then what's really the benefit of having the money in your pension, particularly if you don't get a tax-free lump sum because you're over the £1 million. So either you take it out and pay a higher rate tax, or you leave it to your heirs and you pay inheritance tax and they maybe pay higher rate tax. So they've got like a self-policing thing. And I think if you are at those higher limits, you do need advice as to, or you need to think it through carefully as to what your strategy is in terms of how much you want in your pension. Because if you put too much in, it's going to be taxed anyway, so you may as well not put it in the first place. And I think I sort of respect it, because I think it's a really good way of introducing the lifetime allowance without ever affecting doctors and their final salary pension schemes, but at the same time making sure that we people like us don't use it for tax avoidance. And I sort of respect it. I don't like it, but I respect it, I guess. And I do wonder within all of this whether annuities now have a place, because if you don't want to leave and pay inheritance tax on your money, then one way of making sure that you don't do that is just to take a great big annuity and be done with it. And I do wonder if they will have a little bit of a comeback as a sensible way of planning for all of this. So thank you for watching this video. I do regular updates on tax and accounting issues, and I will be looking at other aspects of the budget in more detail. So please subscribe to the channel, and if you press the like button, it helps me, so thank you.